Welcome back, students who are taking financial accounting. This here is another video in the series for the assigned homework problems for Chapter 4, the problems that are Group B that are assigned in the digital study guide. And I'm just going to pick up with 4-48 here. The only thing I'm going to say about this is, as I look over the information here, it does give this here is saying the accounts for the year are listed next, and of course they are not listed in any particular order, which is just a pain right in the rump. So it wants us to create an income statement, a statement of retained earnings, and a balance sheet. This here they're saying it's going to take 25 to 30 minutes, and what I'm going to do is I'm not going to spend all that time recreating these, for the simple reason that if you watch the theory videos from Chapter 2 and then Chapter 3, you see me creating the income statement, the statement of retained earnings, and the balance sheet. All right, and then you also see the theory videos for Chapter 4, all right, which really don't go into recreating the financial statements that much, even though there is a section in the textbook in that chapter on recreating the financial statements. But I didn't get into it because it was just sort of repetitive. But then if you watch the last video for problem 4-47B, you'll see that I explain that if you go back and you watch exercise 4-33B and 34B, okay, this was the income statement, and this was the balance sheet, and I explained in those videos, so go back and watch those videos as you see me recreate the financial statements, but realize that what was happening in Chapter 2 and 3 was on a simpler level, and when we're moving into Chapter 4, now we're adding an awful lot more, all right? We're expanding the different sections. I disagreed with the way some of this information is being presented, but because this here is such a long problem, I'm not going to cover it. I'm not going to spend a half an hour, 45 minutes working through all of these financial statements. Okay. What I will do is I'm going to sit here and go, okay, what I want you to do is I want you to go and look at the solution, and I'm going to explain what I would do slightly different from each statement. So for the most part, I'm agreeing with the way the formatting on the financial statements for the income statement, statement of retained earnings, and the balance sheet. I'm agreeing with like 90% of it, but I'm going to point out just the differences so that and if you've watched, so that you understand why I would do something different. And if you watch the previous videos, that's just basically more of a longer explanation. But anyway, so on the income statement, right, in the revenue section, they have the figures in two columns here, okay? So they have sales, and then they have the return on allowance and the discount here, and they're putting they're putting the sales figure here and the return on allowance and discount figure here, and then totaling it up on one line right here. And if you watched the previous video, you saw that instead of doing that, I would have used 3 columns instead of 2. All right, and the reason why is because I want to get to take my sales and then take out return on allowances and take out my discount in order to get a net sales. Okay, that net sales figure I want in the second column. So I have these 3 figures here, and I do the math and put that there. And the reason why is because then I could take out the cost of goods sold here and put that number here. When I do the math for that, I end up with my gross profit here. Okay, in this thirdmost column, so that when I'm looking down this column, I can look at my gross profit less my expenses to get my net income, my profit or loss right here. So instead of having just the 2 columns here, I would have expanded that out to 3 columns. The other change that I would make, and again, what I just explained was covered in, you can see the example, my explanation of it in problem 4-47b. Okay, what I just explained would have been there. Okay, so if you want to actually see it, watch that video. Then after we had the gross profit, and I had explained about operating expenses. You can't call them operating expenses, but they're also called selling and admin expenses. Right? That's just a choice of name. The reason why I'm pointing this out is because the authors have gone and said, okay, we have our operating expenses, and we're gonna break this down into 2 categories: selling here, and then general and admin. Right? I mean, that's fine. There's nothing wrong with that. I mean, they're doing much better here because they are listing the different general ledger accounts, and these names are now not. They're probably not general ledger accounts. They're just headings, just like we would put the word revenue or we would put the word expenses. They're just a heading that we're putting on the financial statement. They're not actually a general ledger account. These are the general ledger accounts. And this is, if you watch the 4-47 video, this is more of an explanation as to a better example as to why you see the expenses listed here and then the math done this way. The expenses listed here and then the math done this way. Okay, so that you're using multiple columns. Now, they are breaking this down into saying, okay, once I have my revenues, my gross profit, and I take out my expenses, I get an operating income. And that's fine, okay, because then afterwards they're taking out other revenues slash expenses. I don't agree with that. I mean, it is possible to have other revenues, okay, and then have other expenses. And again, this here is an expansion of the idea of revenue less expenses to give a profit or loss. But then if we have a lot of financial responsibilities, that's why we can have, other revenue here, and then other expenses here to give us our net income, our net profit or loss. Okay, notice this is just a profit or loss, but this here ends up being a net profit or loss. So once they get down here and in the solution you see the operating income, it is possible to say, okay, I want to have another section here called other revenue, other expenses. The thing that I disagree with is the way they did it. They went and said, okay, other revenue, and then they went expenses here, right? And then put interest expense. And they made that a negative $1,300. And remember, we try not to use negative numbers. All right, we try to use positive numbers as much as possible. By putting in other revenue and then bracketing the expenses, they're complicating things by forcing us to use a negative number here. They would have been better served if they had just gone and said, okay, other expenses. And so if I had my other income would be listed here, and then I put my operating income would be listed here, and then I put in my other expenses here, I do the total and get my net income here. And this other expenses, I could have listed this as less other expenses. You don't have to. If you looked at, if you were looking at 4-47, and you saw that they put other expense, interest expense, that would have been much better served in order to define that number. Okay, so this is how I would show that bottom portion of the income statement. Okay, so those are the changes I would have made for the income statement. Now for the let me get rid of this. Yeah, I have to erase all of this with the eraser. If I don't, I end up with other issues. But anyway, technical issues. So for the balance sheet, I'm sorry, for the statement of retained earnings, let me take a look at that. I mean, before I go on to the retained earnings, don't misunderstand me. I mean, the income statement, it is, it is correct. Okay. However, I mean, and if you're an accountant, you're going to see stuff like this all the time. Okay. But you want to try to keep things as simplistic as possible and following a certain format. If you notice that when we're going along here, sure, we have to expand these financial statements, but when these authors are expanding them, they're not following sort of a set pattern, and it's easier if you learn the set pattern and you stick to it. In the 4-47 as an example, they had other expenses and then listed interest expense. Now all of a sudden they have the same exact thing that they're going on here in 4-48, but they're presenting it differently. So now you're sort of like going, okay, well, which one am I supposed to be using? I mean, they're both right, but then when you have to do it, what are you going to choose, or how are you going to make it, right? So if you kind of like follow one set thing, it's right, and and it's actually, I find it easier because I don't have to be doing mental gyrations, and I do want to have positive numbers, so I have a tendency to always do it like 4-47B. It's not to say that it's wrong. I mean, it isn't, right? And that's why, you can have two companies that do the exact same thing, Ford and Chevy, but their financial statements look very, very different. It's because of how they want to analyze the information and how it's all presented, right? But if you follow one set pattern, it becomes, if you're into the memorization of it, which to a certain extent you do have to remember, okay? It's easier to remember by doing the same thing again and again and again, and not going from 4-47 and then looking at 4-48 and going, well, which is it? Right, so that's why I'm presenting the information the way I am. For the statement of retained earnings, as I look at it, I don't have any issues with the statement of retained earnings. The only thing that I might say is, they're listing it as like the beginning and ending. They're just saying retained earnings November 1st and then retained earnings October 31st. I might have put in the word beginning, retained earnings November 1st, and then at the bottom ending retained earnings. And that's just being, to a certain extent, a little bit picky. But you do definitely have to have the date. All right, there is no question. You have to have the date. You can't just put retained earnings. And by having the date, you can eliminate beginning and end. Okay, if you don't have a date and you do write beginning and end, that's still not good because you don't know when that what date that beginning started. Okay, and you don't know what date that ending started, because remember, the retained earnings is for a it's being created for a period of time, just like the income statement. And if a business, let's say they're operating on a calendar year, meaning they go from January 1st all the way to December 31st, if they create a statement of retained earnings or an income statement, maybe they're creating it during this period of time throughout the year. Well, we need to know what that date is, the beginning date, and what date that is for the ending date. And it doesn't have to fall specifically on an accounting period. If the accounting period is running monthly, that's fine, but maybe I want to create an income statement that goes, on a quarter instead, okay? Or the statement of retained earnings on a quarter instead. Even though my accounting period is monthly, right? When deciding what dates to use for the income statement or the balance sheet, it's important for me to know when that beginning and end date is, because they are for periods of time. Remember, the balance sheet is as of a specific date, okay? So on that date, it reflects all of the accounting that has happened since the start of the business, all the way up to that particular date. And it's the same thing with the trial balance, right? The trial balance is as of a specific date. So that's it for the retained earnings. Don't have much more to say about that. And lastly here, for the balance sheet, okay, so for the balance sheet, let's see here. When I look at the balance sheet, you know, I don't have an issue with the balance sheet except for one small minor detail. Now, there's a lot of information on this balance sheet, and you can create the balance sheet going horizontally or vertically. Horizontally meaning assets on the left, liabilities and equity on the right, right? Because that's sort of like equal this plus this, because remember this gives us a total down here, right? So, this format horizontally is easier to kind of remember because the accounting equation, we think assets is equal to liabilities plus equity, okay? Well, you see the mentally, when you picture it in your mind, it's easier to remember it this way. However, if you have a lot of information like you do with this balance sheet, it generally is easier to go straight down the page, okay? And you as someone who's had financial accounting, should be able to read all of this and look at the headings and so on and so forth to be able to determine where my if I'm looking at my total assets here, then I have to be looking at my total liabilities and equity down here. And the only deviation that I would really change here is that it says long-term assets. Can you use the terminology long-term assets? Yes, but you'll see more often the terminology property, plant, and equipment, okay, instead of the words long-term assets, right? PPE is the abbreviation for it. That's how we can talk, when we talk about it, I can say property, plant, and equipment, or I can say PPE, right? And when you're looking at the property, plant, and equipment, when you see that, it's kind of like understood that it's more long-term. So if I have my current assets here, which would be, my cash, as you can see, the listing of the current assets in the solution. I mean, if I had, say, furniture that was being depreciated, or maybe a vehicle that would be depreciated, okay, they would all be listed under the current assets and then property, plant, and equipment, even though if we were doing something like the current ratio, which is, for those who don't remember, the current ratio is our current assets divided by our current liabilities. So if I'm going to do this analysis here, I'm not going to include the furniture and the equipment, the furniture and the vehicle that I'm depreciating, even though they are listed under my current assets. Remember, current assets, property, plant, equipment, this designates long term. All right, these are a shorter term asset. All right, but even though they're listed under our current assets, when you're doing your ratio analysis, you can't just go and say, okay, what my total current assets are. You actually have to think about what is involved with your current assets. So that's pretty much just it for that. I don't want to get that too confusing. It'll become more apparent as you go through the book and we start dealing with different sections. And like, for example, depreciation and so on and so forth. It'll be shown later on in the book on the financial statements as to where they're situated. But for right now, the only difference being is that instead of calling it long-term assets, I'd call it property, plant, and equipment. Okay. So with that said, I'm done with that problem. And like I said, go back and watch exercise 4-33B 34B, problem 4-47B, and also the chapter 2 and chapter 3 theory videos, because they go over creating the financial statements. But as we progress throughout the book, these two chapters gave you a basic understanding, but as we go throughout the book, you're going to expand upon those basics, and that's what's happening in these problems here. Okay, and now this also includes 4-48B, because this is slightly different than this one. All right, they all follow the same generally accepted accounting principles, and so they're technically correct. Right, it's you have to work through them and be able to understand, because of, remember, it's about how you want the information analyzed, and different businesses will want the information analyzed differently. So therefore, even though they follow the same generally accepted accounting principles, they all can look very different. Okay, right, so I'll see you in the next video.